FirstRand has reported a 12% growth in headline earnings per share and says that the tough economic situation in South Africa hasn't shaken their appetite for more investment. The bank also says it supports positive land reform and is excited for the coming years. Arabile Gumede spoke to CEO Allan Pullinger on their full-year earnings.
Mr. Pullinger, thank you so much for your time. I suppose the question will be that you've managed to give out a good set of earnings, but is it everything you expected to have come out of this year?
Yeah, we would definitely say, I guess if we look at it relative to the environment we're operating in, South Africa's, it's been very tough. But the pleasing thing is that the results are driven by operational performance, so it's not playing around on the income statement and, with risk or something. It really, truly is sort of that ongoing operational performance which supported these earnings. And so I think FNB was the star of the show. As you've seen, they really did all the heavy lifting. As a franchise, up 16% year on year, so they posted their highest ever level of profits and their best returns. I guess what's very pleasing for us in FNB is that they were able to grow customer numbers, so their customer numbers are up 4%, and it doesn't sound like a lot, but I think in a very soft market, to grow your customer numbers 4% is meaningful. And I guess, if you stand back and you think about that, it's because customers like what they see. And what they see coming out of FNB and the propositions, weren't created in this last year. Yeah. It's been a deliberate strategy over a number of years. Yeah. And so that's all, I think, starting to play out now.
Mr. Pullinger, what about the rest of Africa? One would say that you don't have the biggest portfolio, of course, of the major banks when it comes to the rest of Africa. Are you planning to grow that? Are you planning to make it an even more significant part of your business?
So we are, I guess we followed a slightly different approach. Standard Bank has a much bigger portfolio in Africa, and as does ABSA. Yeah. And so we probably don't even compare ourselves to their portfolios. We sort of talk about sort of the big table in Africa, and that's not really for us.
You've been able to do well despite that.
Yeah, we don't really have a seat at that big table. Yeah. We've taken a different approach. Sure. So for us, Africa is exciting. It is a growth opportunity, but it's not the only growth opportunity we pursue. Sure. So we also are we're obviously pursuing integrated financial services here domestically. Okay. So this is to get into the adjacent activities around banking, so insurance, asset management, savings and investments. So you can see how that's been scaling out in our numbers. So that's a great sort of growth lever that we have in South Africa. And then we also have this bank in the UK. So I think Africa has got us a place in the portfolio. It's a growth opportunity for us. We have our 9 banks. For now, I guess we are really putting the effort into to invest in our 9 subsidiary banks. Yeah. 3 are very mature, great banks, long history of track record, earnings and dividends. Probably need a lighter touch from us. What we would like to do there is to get insurance activities, etc., scaled in those markets. And then the other banks, are still quite youthful banks. They've got different challenges in some of the markets. We've got some credit issues that we've been dealing in some of the markets. We're also investing into the platform, so we're still putting in hundreds of million a year into our portfolio.
What are our prospects for the remainder of the year? 2018 has done a good set of earnings. How do you make sure you continue that and make sure it becomes an even bigger part of your business moving forward?
Yeah, so the momentum, we've started with 2 months into the new year. Pleasingly, the momentum certainly in FNB that I spoke about is continuing. The macroeconomic environment is going to be tough, there's no doubt. I think South Africa has got a number of years of very difficult road ahead. Yeah. We are pretty assured and convinced that under the leadership of President Ramaphosa, we're going to get some of these things done. I don't think they're quick fixes, but I think let's rather start dealing with tackling the big issues and getting those done. And I think South Africa will come back. Some of our difficulties are caused by global factors. Sure. So this rand weakness, this risk off around emerging markets obviously impacts the rand. It's come at a bad time for us because the oil price is also strong, and so that all translates into the fuel price at the pump, and we all know what that is. But I think these things we certainly, not too far gone. We're not these doomsayers, we think it's going to come right. And for us, we're going to continue to focus on all of our customers and our clients across all the different sectors. Agric is a very big part of our business. In F&B commercial, our book is 29 billion rand of lending direct to farmers. It's a great segment for us. We'd like to grow it. We are very, very supportive of positive land reform. We think it's urgent. We think there's a lot that can be done. We think that a lot of land reform can be done in a way that uplifts the economy and unlocks growth. And for banks, selfishly for us, that's great because there's another lending opportunity for us. So, we are very, very supportive of this positive land reform. And we're choosing not to listen to the noisy constituencies around land. I think if people should rather listen to the calm and reasoned voice of the president. Let's look at that. There's nothing wrong with that. That's all positive. And we choose not to listen to the noisy voices.
Thanks for joining us. Pimelo Zonke has your weather details.